gold and especially silver just had, massive price run ups. They've had a correction. Gold's hung in there actually surprisingly well. It's back above 5,000. I think it's close to 5,100 the moment we're talking here, Luke. Um, and one of the fears that has been expressed over the past week or so is that correction's been going on is, oh, is this going to be like what we saw in 2011 or in 1980, where we had this blow off spike and then basically we gave it all up and then the precious metals just kind of did nothing for a long time. I think you think this time is different for the reasons that you just mentioned. True?
Oh yeah, it's night and day. It's apples and oranges. We were trying to get gold out of the system. We were trying to get the world to buy our treasuries and get, recycle their surpluses into our financial assets and get our factories out in the process. That's what we were trying to do in 1980, and from a policy standpoint, and from a in 2011, we were trying to sort of maintain that system. It's a matter of national security for the United States for the price of gold to go up, not down. In 1980, it was a threat, starting to become a threat to national security if it kept going up. You can read as much when Volcker said gold is my enemy.
Yep.
2011, that was still, Wall Street still dominated policy circles in Washington. And so gold's going up and up and up and up. And hell, they didn't mind it 2008 to 2011 because it told them, it was giving off a message of inflation and et cetera. That helped them get out of that crisis. They needed to inflate for a while. But once it got to a certain level, they didn't like that as much in terms of the message. They need it higher now for multiple reasons. If they want to reshore, if America does not want China to make the majority of its weaponry for America within 5 years, then America needs the price of gold a multiple of where it trades today. 60% higher to a multiple, 160 to, I don't know, 400, 500% higher. I don't know what the right number is. I can offer different perspectives on that. But it is so different now versus those periods of time. Now, people say, oh, it's never different this time. You're right on that level. It isn't different this time. 1973 to 2020 was the only time in world history where the debt of an insolvent sovereign served as the primary reserve asset for global trade. That was the anomaly. We're just reversing that. And so it's really, I think, the biggest, in 2017, I called it the biggest mean reversion trade in history. A couple different presentations I did with gold at whatever, 1,100, 1,200, 1,300 bucks. So I think gold, I think it is different than the last 50 years, but it's no different than what it was the prior 5,000 years. And ultimately, when you look at the imbalances as they exist, the United States needs gold way higher than it trades today.
Okay. This interview is very complimentary of one that I just recorded last night with Michael Every, and I think yours is going to come out before his. Michael talks about mercantilism, and similar to you, Luke says, hey, the globalism era that we all grew up in, that's the historical anomaly. The world ran on mercantilism. It's now running back on mercantilism, and we get to realize that shift has gone on. So for you, obviously back 1,300 was the best time, but 1,300 bucks an ounce. But it sounds like you're saying, this is an all in the pool moment for people who want to invest in gold, which is there's very big trends afoot that are likely to be driving gold higher from here, perhaps several multiples, 2, 3, 4 times from where it is right now.
Yeah, look, the chart I've used many different times shows the and I think Michael Every's got a great point. I agree with him. Mercantilism, globalism, that's all over. That means the Americans aren't going to export paper for stuff anymore. The Americans have to export real goods. Americans don't make anything real after 40, 50 years of that old system. The only thing if that system was over, you know what one of the number one symptoms would be? The Americans' number one export being non-monetary gold, because we got nothing else to send that anyone wants. From a competitive standpoint, from a cost perspective, at least till the dollar, right? The Chinese make a nuclear power plant, 1 gigawatt to 1 gigawatt. Gigawatt's the same here or there. Chinese cost of that's 83% cheaper than America. So if globalism is over, the dollar needs to fall against the yuan by probably 60 to 80%. That's the meaning of the end of globalism. That's the meaning of the end of mercantilism. Gold would be the release valve for a lot of that. Well, you can look at it as when you look at U.S. foreign held debt, right? So if we go back in time, a chart I've shown a number of different times, the U.S. Market price of U.S. official gold, assuming it's all there, I do, but who knows? But let's assume it is for sake of discussion. The market price of gold of the United States 8,100 tons of official gold as a percentage of the foreign held portion of U.S. Treasury debt outstanding. Today, with the massive run that we've had, it's at 14 or 15%. So the market price of U.S. official gold as a percentage of all foreign held treasuries is 14, 15%.
Hmm.
By way of comparison, when the Berlin Wall came down in 1989 and our unipolar moment in history started, it was 20%. So gold would have to rise by another 30 to 38% just to get to the 1989 price of gold relative to our foreign debt. And that assumes debt never rises. Our foreign debt never, ever rises again. Now, if we want to go back to the long-term average of that percentage, that was 40 to 60%, going back 60, 70, 80 years. So let's just use 50% in the middle of it. 50% from 15, you're gonna need what, three and a third, right? 3.3
Yeah.
times here, 17, 18, $20,000 gold just to get back to the long-term average. Now, if we had an honest to goodness dollar crisis, real lack of faith, and there's plenty of which we're all looking at that could trigger that, it's not my base case. But in 1980, the US official gold against its foreign held debt was 130%. That's up almost 10x from here. Gold would have to go to $45,000, $50,000 an ounce to be the same gold price as gold in 1980 relative to our foreign debt. When you look at it that way, that's most people just have no concept of how much the debt has gone because it's such a big number. It's
Right.
hard to fathom. So I look at that and go, yeah, it should do, gold to me, I think needs to be 10 to 20%, 25% everybody's portfolio. And the reality is most people own maybe two, maybe in America.
And that's on average. Yeah,
Right.
that's if you average it all, right? Which means there's a small number of people that own higher, and then everybody else owns none.
Owns
Yeah.
nothing. Owns nothing.
All right. What's fascinating about that point, which I think is a very important point, is the video before this one on this channel was with Tavi Costa, who brought up that exact same chart. And I hadn't heard of the chart. I know you said you mentioned it, but I hadn't been on my radar until Tavi brought it up. And then here you are in the exact next interview bringing it up again. So to me, I pay attention when I start seeing smart people look at the same data. All right, so let me ask you this then, and then we'll get off gold onto a few other topics. So, I mean, as long as the U.S. is still the world reserve currency, right? Even if we're shifting towards this world where we're starting to settle trade and other assets, um, Triffin's dilemma. You'll always run a trade deficit, whatever. So we will be always making payments and maybe on a net basis, sending more gold out than we're receiving for as long as we have a trade deficit. Obviously, keeping our gold stores flush becomes a real matter of national importance. Um, how do you see the U.S. prioritizing that? And is that part of the undercurrent of the story of what's going on with Venezuela and Greenland and things like that with the U.S. expansionism?
I maybe. I think a lot of what's around Greenland in particular, I think there's some
I
Arctic
don't know. I don't know
Circle.
how much gold, if any, there is there. I assume there's some, but I don't.
Right, right.
Yeah.
Yeah, I'm sure. I think Greenland. I think the bigger issue is actual actual physical critical minerals. Um, the you know the CNN reported last summer that the United States ran through 25% of its THAAD, high-end air defense missiles in 11 days of medium intensity combat defending Israel. So we went through a quarter of our stores in
Wow.
medium
Yeah.
intensity, right? And so, to me, I think a lot of what I'm watching around Greenland, Argentina, Venezuela are two things. It is an admission that our industrial base, that this prior economic system, globalism, mercantilism, whatever, has
Right.
hollowed out our defense industrial base so badly that we are in a critical emergency around these critical minerals. And
Got
so
it.
we are doing what we can to grab them.